Good morning. Today is Wednesday, March the 20th, 2019. It is 10:31 a.m. New York time. The analysis given here is for educational purposes only, and it is in no way to be used as investing advice. It is simply my own personal opinion formed from 10,000 hours of charting experience. So here we have ACB, and here's the 15-minute chart, the hourly chart, the daily and weekly charts, respectively. In my analysis yesterday, I said that it was very likely that we were going to have a regression as the price came in here and touched the top of the channel right there. See, every time you have a new high and it is on top of the channel, take a look at the channeling of the price here on the hourly, for instance. You have a regression. Now, this topping of the price here, I'm looking at the hourly chart, comes from a previous topping, and as that previous topping had its own regression and continuation, we can see it here on the hourly, and we can see more detail on the 15-minute chart. So what happened there is, as the price regressed on this particular instance and then it continued higher, so we have a double top where the second top eclipsed the previously established top, so we have a new high, yet technically we have a second technical top much lower than the first one. So here we have the makings of an entrenched negative divergence. And then take a look at how, if you pay even more attention to the details here, we have this technical topping here, which corresponds to this price top. We have a small regression. The technicals on the 15 move to the downside. Then we have a rather strong continuation, establishing a new top. And when that happened, this created a downside pressure pattern. I did explain on my video yesterday downside pressure patterns briefly, but to give you a refresh on that concept, take a look at the price travel from here to here. So we have that distance right there. I painted this trend line here just to use it as a measuring tape, if you will. See, from here to here. So it's that distance, right? Now let's trace one for the indicator on the corresponding pattern. See the difference in the length of the price trek to the upside versus the indicator trek to the upside. And so here we have a much shorter indicator on the same move, thus implying down pressure. You have to imagine that this thing is bearing pressure here on top of the price and it wants to push it down. That, coupled with the fact that we were on top of this channel right here, again, I'm going to use this line to paint the channeling of the price. See, top in here, top in here, top in here, in every instance a regression. And so when that regression took place right here, we had already a downside pressure pattern in here. Then we have the continuation of the trend establishing a new high. So we have a system of really three tops on the price, 1, 2, 3, and on the indicator as well, 1, 2, 3. So these points correspond to each other, and we call this pattern a head and shoulders. And the reason for that is we have 3 points over here, much like a person would have a shoulder, a head, and a shoulder. That's why it's a head and shoulders pattern. And what you have to do mentally, if you will, is you can connect the dots of the 2 shoulders, and then you project that to the price, like this. There's the connection of the 2 shoulders, and now let's project that onto the price, like that. And so that gives you a technical projection of where the price should be. The price should have been at 950. That's what the technical picture here calls for. And we had the price visit basically 950, as you can see right here. Boom, end of story. That's how you should interpret this technical picture. Now, you have this level of clarity on a 15-minute chart, and on the hourly, you have a downside pressure pattern, which I talked about yesterday. But you can also see the head and shoulders, shoulder, head, shoulder. And if you project this technical picture onto the price, you can see that the next shoulder here is much lower, probably right around 950. Now, these technical projections are not mathematical certainties as much as they are guidelines that give you an idea, a general idea of what could possibly happen. Now, when you analyze this for thousands of hours like I have, you get to see that these types of patterns usually move the price in very much the same way, hence my ability to call regressions on the channel and continuations on the channel, forecasting what's going to happen with great degree of accuracy. Now, if you watch my video from yesterday, I did say that the hourly was going to develop its technicality, in other words, the blue line, the indicator, to the downside. And what that does, it's creating room, much like the 15-minute chart did here, so that on the price continuation, like here, and we create this new high, we have a well-established negative divergence here on the 15, along with the head and shoulders, which we just analyzed. And so what is likely to happen is a continuation to the upside, creating a negative hourly divergence. That's scenario number one. Now, while the price had a regression of about 75 cents or so, you can actually click on the price talking here and then drag this and visit the bottom of that price here, and it tells you, take a look at the pop-up at the bottom part. It says minus 0.81, so that was an 81 cent regression. Now, the price regressed 81 cents here on the hourly. I'm seeing it on the hourly. And yet, the daily, technically over here, the indicator on the daily, is not pointing down. It is registering the price movement to the downside by showing us signs of weakening of the poise of this blue line, the indicator. You see, it's not perfectly straight anymore. It's a little bent, if you will. If I take a picture of this right here, and then we open it in here and we zoom in on it, it is clearly evident that the daily over here is showing us a little move to the right, but it is not pointing down, it's still pointing up. At the same time, did the weekly turn to the downside? No. So the uptrend is still very much alive. So my expectation would be for the price to come back up. However, here's a possibility. If you take a look at the daily and you trace a trend line here, were we not at the top of the channel? The answer is yes. What happens when we have a visit on the channel regression line to the top of the channel? We have a regression. I talked about this yesterday. We have a regression. So here we are visiting the top of the channel, and we are in the middle of this regression. This regression, for all intents and purposes, can sustain longer and come down more, and at some point actually turn the daily, over here the indicator on the daily, to the downside, much like we had on this previous instance over here. While the weekly, well, that event was taking place, showed signs of weakening, much like the daily is showing signs of weakening because of the price regression we had right now. But once that regression subsides and ends, we have a continuation of the long-term trend, exploring new highs, and the weekly continued the upside. So that is a scenario that can definitely play out. And so the price drops this morning, and then it quickly goes back up because the trend is still to the upside. The path of least resistance for the price is still up. Let's take a look at the 1, 5, 15, 60 setup to see what's the technical picture below the 15 and hourly charts respectively. Here's the 5-minute chart with an upside pressure pattern. Take a look at how the price is channeling to the downside here. See, it visited the bottom of this channel, and what happened? It regressed. And then it seems right now that the price is continuing the mini trend established right now by the hourly that is actually pointing down. I see, however, on the 15, that the 15 looks rather long compared to the price action, and it's broken in many parts, which imply support being created underneath, where I see real organization for an upside pattern. So I'm starting to see over here that it is possible that the price continues the downside for now. However, if the price went up, it wouldn't surprise me because the trend is still up. And if it did that, then it would form a rather strong hourly negative divergence. So those are the two distinct possibilities. From an options trading standpoint, definitely there was an opportunity over here, say on the 10 puts. And I'm just using this as an example. I would probably never trade puts on this particular ticker. I have not gone over to see what the spreads are between bid and ask on options and how much volume there is and so on and so forth. And so I'm just using this as an example. For short term, obviously, we had the price visit the top of the channel, and a regression was absolutely in the cards. We had a very clean pattern on the 15 here, a negative divergence with the head and shoulders, which I just explained. And so short term, boom, there's a regression. And if you had traded, again, we are talking hypothetically over here, the 10 puts, they visited 950 briefly, and so they would have been 50 cents in the money. And so that type of movement that fast can create pretty juicy returns. We're talking, 70, 80, 100%. But you have to be very fast in exercising an exit so that you keep your winnings and you can give them back. However, the long-term picture, and let me for that go to the daily, weekly, monthly, and quarterly. The long-term picture here remains to the upside. What is the daily doing? Pointing up with great strength. What is the weekly doing? Pointing up with great strength. What is the monthly doing? Pointing up with great strength. And as the price continues the upside, if we extrapolate the channels over here on the monthly, it stands to reason that it is very possible that the price explores highs above 12, possibly 14, 15, or 16 even. But when that happens and we visit the top of that channel in the future, it will be met with a negative divergence on the monthly. And everything is cyclical over here. So the upside on the weekly will end, fueled by a negative pattern of weakness underneath on the daily in this case, and that will top out that weekly, much like it did here, and then you have a rather strong move to the downside, where the trend for a while changes to the downside. Right now the trend is still to the upside, painted by these charts as I just explained. Daily pointing up, weekly pointing up, monthly pointing up. And so the long-term picture over here is still upside after we end the pullback that we are in the middle of right now. And it could be, because we visited the top of this channel here on the daily, much like this one, and this one, I analyzed this yesterday, lasted about 3 weeks, or 15 trading days, which is about 3 weeks. So the long-term picture here is still up. Let's go back to the 1560 daily weekly. And so here we are. And the price is going down right now. What is the hourly doing? Pointing down. What is the 15-minute chart doing? Pointing down. Let's take a look at the 30, 60, 2-hour, and 4-hour charts. Yeah, take a look at that. 4-hour has actually turned. The 2-hour has turned. I'm talking technically speaking. And so it looks like the downside here can sustain for a little longer. And it could be possibly like this one or like this one right here. And then that will subside, and then the price continues the upside. That's what the technical picture on the daily and weekly tell us right now. So there you have it. Now, before I capitulate on this, I want to show you quickly something interesting. See, this is SPY, and SPY is an index, and it is made up of 500 different companies underneath. And so this is a thermometer for what's going on in the market. What did we have here on the hourly? Did we not visit the top of the channel? Yes, we have a top in here and another top in here. So we have a double top. And what did we have technically? Another double top. Was the price not at the top of that channel? Check. Is it being met with a negative divergence underneath? Technically, check. What does the price do? It drops. So the general sentiment looking at this index was that the price was going to drop. And that is exactly what happened on ACB. Now take a look at the 30-minute chart over here. It is also showing the divergence. Let's go to the 1560 daily weekly and take a look at how the hourly had that top of the price at the top of the channel being met with a negative divergence here on the hourly. Did we not have a negative divergence on the daily? Yes, we did. What is the price doing? Regressing. Now take a look at how the 15 comes in here. It had a downside pressure pattern over here. You should already, by the explanation I gave you previously, be able to identify a downside pressure pattern. If not, go back and watch that part of the video again. And so the 15-minute turns and the price drops. A position on the 283 puts entered at around noon yesterday, made on the expiration on the 29th, Friday the 29th, about 100%. And a position on the 283 puts on expiration on the 22nd, this coming Friday, made like 150% or so. Now let's go to the 1/5/1560. Now take a look at this. So you have the price, here's the hourly, the price coming up, visiting the top of the channel, being met with an hourly negative divergence. When you see a divergence like this, you have to mentally immediately extrapolate and place this on top of the price over here, and it tells you where the price should be technically. See, the technical picture here called for the price to be around 280. It has not made it over there yet. Can it make it there? It's possible. It's definitely possible. But let's say that you were trading something short term. You know, you extrapolate your pattern in here and you go for, say, the 283s or maybe even the 283.50s, and you double your money and then some. And once you have done that and you form an expectation for a regression on the establishing trend in here, then you say, you know what? I already doubled my money. I'm going to get out. And that's the end of that story. Now, before I capitulate this video, I want to show you something else. Here we have a 5-minute chart right here, right? So this price topping in here is the same topping that we see here on the hourly, and the 15 is the same thing. The only thing is that, so you take a look at on the hourly in this area here, right here, that area, you see the bars going up and down like that, and they're kind of, it's a cluster of bars together, and it's hard to make sense of what actually happened. When you zoom in, and by zooming in, I mean looking at a time frame below the hourly, in this case the 15, you're going to bring about more detail. See? And if you zoom in even more to a chart underneath, you're going to bring about even more detail. And so what we have here, we have a 5-minute chart, and we can see all the detail. And every time I click, take a look at the correlation on the hourly. See, I want to click here. Take a look at the correlation on the hourly. That's right here. It's right there. See? Now, when the price was topping out over here, it was also topping out on the 5, right? And was that not being met with a negative divergence on the 5? Check. We have a price double or triple topping here with a new high, top of the channel, being met with a technical picture where the second top on the indicator was much lower than the previously established top. That is a negative divergence. Then you have that with 15 that had a downside pressure pattern. The downside pressure pattern is the travel of the indicator here versus the travel of the price here. The price travel is much larger. So many factors come into play here. They come together to form this rather significant, clear picture that is telling you way in advance that the price is going to drop. And that it did. And so to capitulate, that's how you read these patterns. It is very important to always keep in mind the channel regressions. Take a look at the 15 here. See that? Take a look at the channel. Top of the channel, regression. Bottom of the channel, continuation. Top of the channel, regression. Bottom of the channel, continuation. Top of the channel, regression. Now, when you build up this much down pressure, then what you have is an interruption of the channel, and the trend changes to the downside. That's why this negative divergence grabs the price, and it's changing the trend to the downside. Now, overall, in the larger picture, if we go to the 15, 60 daily, weekly setup, we see that the trend is still to the upside. However, we have introduced a lot of weakness in here. Take a look at how this daily is rather broken, and it is now showing us a very clear negative divergence. It's not of the greatest quality, however, it is at a daily level, number one. Number two, it has a lot of support in charts underneath, like take a look at this 4-hour. Over here, we have a system of topping that's happening all along over here for more than a month. And the technical picture over here is a negative divergence. Sorry for the interruption there, but the telemarketing calls just started. Unfortunately, I have to answer those phone calls because I'm running my printing business, and that could be a customer, you never know. Anyway, so that daily chart, it's not alone. It has a lot of negative patterns on the charts or time frames underneath it. However, let's take a look at the weekly. The weekly still is very, very poised to the upside. And it remains to be seen how much damage this daily is able to do. This daily might be able to drop the price further and introduce more weakness to the weekly and flatten it, like in this instance in here. And then we have the weekly turn to the downside. If that comes to pass, then I'm going to go to the daily, weekly, monthly, quarterly. If that comes to pass, then we will have a pretty strong move to the downside, because the monthly is already in negative divergence territory. See, the monthly was and has been pointing down for a long time right now. We have a price pullback on the establishing trend. This is the big drop that we had over here. And the market, it seems that it's being manipulated and the price is just pushed back up. But the large time frames in here are indicating a lot of weakness. If you hear other experts talk about the stock market, all of the experts are saying that a big drop is coming and the market has found its tops and so on and so forth. And so this ticker here, one of the most important ones in the world, the SPY, the S&P 500, is telling us that there might be a rather big drop. Now, the way to look at this is an establishing trend to the downside. So if you paint channel regression here, here's the bottom of that. But if you continue projecting that over here, it says that the next drop of the price is at 200. And we have the technical picture to support something like that. It's just that the weekly is still pointing up. The quarterly chart over here also shows us weakness. It has already been broken. It pointed down briefly. Right now, it has gone back up a little bit here, acknowledging this much upside that has been going on for a few months right now, for almost 3 months. And so that's the long-term technical picture. But the reason I came to SPY more than anything is just to show you this hourly negative divergence that definitely had an impact on ACB. And here we are. So I leave you with these thoughts. and I will catch you on the next video for my next set of ramblings. See you soon.